Good morning, everyone, and welcome to Morning Markets. My name is Chris Leyland. I'm Director of Investment Strategy here at True Potential. What I want to do today is really talk through what are the key issues, what are the discussion points that we're having in the investment team right now, what are the key events that we're watching. And certainly the main key event happened last night. So several hours after the end of European trading, it was announced that Congress backed the $1.9 trillion stimulus plan. So that means it'll be passed over to Joe Biden to sign off. So the plan includes a round of direct payments of up to $1,400 for most Americans who qualify. It extends federal unemployment benefits of $300 a week. And it provides hundreds of billions of dollars in aid to state and local governments. If we look at the stock market reaction was strong. The Dow Jones hit another record high. It closed above 32,000 following the announcement of the relief package. The bullish sentiment from the US pushed up equity markets in the Far East. And in addition to that, European stock markets are poised for a positive start. I guess one of the worries that investors have shown is, will all of this spending in the US lead to higher inflation? Yesterday's US inflation report was interesting as the headline figure for February jumped to 1.7%, and that was in line with forecasts. But the core reading actually undershot the consensus estimate by slipping to 1.3%. So the news removed some of that fear in relation to US inflation. And obviously that fear has led to the recent upwards moves in US government bond yields. If investors do believe that inflation is less of a worry in the near term, then that could act as a cap to the US dollar, maybe a floor to equities as well, and also to gold. If we look at what's been happening in Texas and the oil price, the adverse weather that was seen there recently still appears to be impacting refining, as the EIA report showed that US oil inventories jumped by 13.79 million barrels. So what does that mean? It means oil refineries are slowly coming back on stream. In the same update, it was revealed that gasoline inventories dropped by almost 11.9 barrels. So that counteracted the oil data, and what you saw as the oil price react. So WTI and Brent both closed higher last night. If we look out to today, the ECB, the European Central Bank meeting, is taking place at lunchtime, and that'll be watched keenly by investors. No change is expected to policy. The refinancing rate and the deposit rate are tipped to remain at 0 and minus 0.5% respectively. As we know, in December, the ECB boosted the pandemic emergency purchase program by 500 billion euros, and that gives a total of 1.85 trillion euros. And the expectation is that there'll be in no rush to carry out another tranche of easing anytime soon. In light of the tough restrictions that remain in place in many Eurozone countries, the outlook in the near term is potentially a little bit muddier. Vaccination rates in Germany, France, and Italy are all around 9%. And that's in stark contrast to the UK. So the UK's rate is approximately 35%. So it's far closer to reopening its economies. However, it's important to realise that the ECB has been helpful with respect to providing support to the area. Hope you enjoyed listening to me today, and I will speak to you soon. Thank you very much.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.